Hey y'all, it's Dr. Know-It-All. I'm sure you are very excited about the Q4 results, and if you didn't have a chance to listen to Elon Musk and Zach Kirkhorn talk about it, then I'm here to provide you the information. The first thing I want to talk about real quick is just a review of something that I went over really quickly before they actually did the call, because this came out a little before that. But the highlights for 2022 were 16.8% operating margin in 2022. That was versus 14.7%, I believe, in Q4 of 2021, 16.0% in Q4. They actually talked about that. Elon talked about that in the earnings call, where he said that because of, price compression and things like that, and having to put on sales because people were holding off because they were concerned about, in the US in particular, about the Inflation Reduction Act tax breaks and everything. So they had to reduce prices in order to compete with that short-term little blip in demand. And so they had a lower operating margin in Q4, but obviously their GAAP operating income was very large, $4 billion in Q4 and $13.7 billion GAAP operating income for all of 2022. Net income of $12.6 billion or $3.7 billion in Q4. And, cash flow, they've got a ton of cash, basically, $14.7 billion free cash flow. Operations, there's 6.5 gigawatts of energy storage was deployed in 2022, which was up 64% year over year. And record vehicle deliveries, which we already knew about, of 1.31 million units, 1.31 million vehicles in 2022. So let us talk a little bit about what Elon and Zach said. Elon Musk came on to the earnings call first. He said that the first thing he said was, I want to lay to rest the worries that demand is not strong enough. He said orders are currently at 2 times the rate of production. So if they're making 1,000 cars a day, which I know they make, let's say 10,000 cars a day, they have 20,000 orders per day. So they're basically doubling what they do. He said that's the reason why in the US in the last couple of days, there was a $500 raise in the price of the Model Y after they dropped it to $52,990. I believe it's now $53,490, something like that. Anyway, don't quote me on that exact number, but basically they raised the price by like $500 because there was so much demand that they wanted to temper that down just a little bit. As Elon Musk said, he said price really matters and affordability really matters. And I appreciate that he said this, because he said, I think a lot of people who pay attention to these earning calls and stuff are relatively well-off people, and they don't think about the fact that the difference between a $45,000 and a $60,000 car is potentially the difference between being able to purchase a car and not being able to purchase a car. I think if you have a lot of money, you consider it something like going to the store and buying nice food as opposed to kind of like cheaper food or something, right? So you think it's relatively small compared to your net income. But for most people, myself included, when the prices of the Model Ys went up into the mid 60s, I was like, we couldn't afford to buy one right now. So I was like, please, don't want our car to get wrecked or anything like that. So price really matters for most people. And so you can see how that exponential demand increase is there. If you reduce the price a little bit, you get a lot more demand. And I very much appreciated that he mentioned that. I thought that was a nice thing for him to say. And it reminds me that he was at one point just a middle-class person. So, I mean, maybe not so much anymore. He's very, very wealthy now, but he was at some point a relatively middle-class person. Okay, so Berlin and Austin are dropping in the cost of production commensurate with larger production ramp. That's fairly obvious. There were a few really good gems within the context of this. One of them, the first one that I heard, was that full self-driving beta is now being used by 400,000 North American customers. So that's the US and Canada, I believe. I don't think that Mexico's counted for that at this point, but still, that is a huge take rate. I assume a lot of those people are doing it on a $200 a month subscription basis as opposed to having paid for it. Or there could be a lot of people who have had the vehicle for a long period of time and had full self-driving for that. But anyway, that is a really, really good number. That's solid. And as Elon Musk very astutely pointed out also, this is the only way for consumers to try out full self-driving, autonomous vehicle software. You can't try it. You can go ride in a Cruise or a Waymo or something if you live in the right city. but you can't try it yourself. So this is the only way consumers get to try it. It's remarkable what the take rate is. It's remarkable that this is now available to everybody who wants to pay for it. If you have a Tesla and you want to pay for it, or you already have paid for it, you can opt into beta. There's no longer that 98%, driving capability or whatever, something like that. So these are huge things. And it's also incredibly important because it means that they are gathering data to make the case for this being very safe. Elon Musk said they've got 100 million of full self-driving miles outside of highways. So remember, highways are still using the old stack at this point. So this is 100 million miles of city traffic. Good gracious. I can't even imagine what a nightmare it is to think about. Like if I had a definition of hell, it would be having to drive infinite miles in rush hour traffic or something. That would be pretty awful. But anyway, the vehicle fleet as a whole has 100 million miles of full self-driving beta miles outside of highways. So those come at a much steeper cost because, of course, you're going much slower and you're stopping and starting. But that is fantastic data that they have. He said that the safety statistics are clear. Did not go into much more detail about that. Hopefully we will get more details about that at some point, but that the safety statistics were clear and that it was better than human drivers. There were some questions at the end of the thing, so I'll get back to this in just a moment. They're looking at getting 100 gigawatt hours at Giga Nevada. Excuse me. So currently phase 1, they've got 35 gigawatt hours. Everybody knows they just announced plans for phase 2. That's to get to 100 gigawatt hours at Nevada, and that their ultimate goal is 1,000 gigawatt hours or 1 terawatt hour internally. That means their own battery production. Plus, they're going to keep on buying from everybody else they can buy from. They said, Elon Musk said, I think, yes, he said quasi-infinite demand. So there you go. So basically, it's like the more you can create, the more they will use. There is a giant maw of just sucking in batteries at this point. So they really need to, mine lithium. Lithium was, again, the thing that he talked about the most. It seems like they're really working. Like Tesla has shifted their battery chemistry plans significantly towards LFP, or lithium iron phosphate. And one of the consequences, iron and phosphate, easy to get, no problem at all. Lithium, you have to use more of that than in NMC type batteries with the nickel and all of that other stuff. And so that means that you actually need more lithium for each of these batteries. So lithium seems to be the major sticking point, and that will be really interesting to see how Tesla handles that. They have talked about going into mining and refining, and I think they probably are already doing that. I think that's what Lathrop is for. So anyway, they're clearly thinking about the future and how they're going to be able to continue to ramp up this, again, quasi-infinite demand for batteries. And he also said the form factor wise, they're planning on doing this with the 4680 battery, which is great. That's for everybody who's been worried about it ramping slowly. Again, the beginning of these kinds of ramps are generally relatively flat and then they take off. So later on, he talked about how they have 1 out of 4 lines at Texas that is actually operational at the moment, and the other 3 are coming online. So 4680 is the way of the future for Tesla, and I know that other companies have licensed out that form as well. So it could be the case that many people will be using 4680s as well. Elon Musk went and said something. He talked about this yesterday at his kicking off phase 2 of the Giga Nevada thing. He talked about the 3 pillars of sustainable energy. That's electric vehicles or electric transportation or battery transportation, solar and wind power, which is renewables, and then stationary storage, which is the ability to store those intermittent sources so that when there's no sun and when there's no wind, you can still get power back out of it. So their big goal is still fully sustainable future. You can see a lot of the decisions that they're making right now are still based on that. That's what they want to do. And speaking of that, the next thing that he said was they want to make and sell as many cars as they can. Strong growth plus the best margins they can get while they're growing. And they want to be the best manufacturer, and manufacturing is going to be their core strength. Elon has talked about that before as well. Excuse me. He's talked about how the real secret sauce and the thing that nobody else is going to be able to catch them on is going to be their manufacturing prowess. So interesting how they went from like 2018 with the Model 3 and they were the kind of a laughing stock, and Sandy Munro, said, oh my gosh, this is terrible. Build quality is terrible. Now they are clearly out in front and leading and accelerating away from everybody else. So manufacturing is going to be huge, but basically they're going to cut margins in order to continue to grow. And I just did a video on that this morning. Definitely check it out. I'll put it at the end of this video if you haven't seen it yet, but it's about how the long buying cycle of vehicles is going to make the collapse of internal combustion vehicles faster than anybody can believe. And I think faster than the rise of EVs. So anyway, pay attention to that. That'll be a big thing, but basically Tesla's there to fill this gap as fast as they can. All right, then we get on to Zach Kirkhorn. He said operating income doubled this year, which is great. Revenue increased 50%, and free cash flow, free cash that they have available, increased 50% as well. So operating income, amazing, right? They doubled that. These numbers are incredible for companies that are a company that's making billions of dollars, right, in profit. These kinds of things are just kind of insane to even think about growing that fast when they're that large of a company. So I bet any other auto manufacturer in the world would just salivate over those numbers. In fact, half of those numbers, they would probably be really, really happy. Zach went on, let's see, Q4 sequential and annual margins were impacted by ASP, average selling price reductions. So again, a bunch of headwinds. There was COVID, there was the Inflation Reduction Act. All of these things kind of work together. And he specifically called out 2022, the interest rate hikes by the governments, not just in the United States, but everywhere, effectively made the cost of the vehicle 10% more. So if you were buying a $50,000 Tesla when the interest rates were low, assuming that you financed the car, effectively you were buying a $55,000 Tesla after these interest rate hikes. And that's a big deal, right? That's hard to do. That increases your monthly budget and all of that other stuff. So really, really big deal. Also, cost of goods inflation. So that went up. He specifically called out lithium. Like I was saying, they really, the price of lithium has gone way up. I know they have long-term contracts, but even Tesla can't be immune to the insane rapid rise of lithium. So anyway, so there was a lot of that. They had early ramp stages in Berlin and Austin, and that of course increases the cost per vehicle. And of course, he also said, interestingly enough, that this actually, I guess proves something that people have suspected, but there was a question about this, which is that the Model Y is actually a little bit more costly than the Model 3 to produce. So there was some speculation at some point that the Model Y was actually cheaper to produce than the Model 3, but he said it was slightly more. And because the mix is skewing so heavily towards the Model Y, because that's the car everybody wants, that means that, they've reduced their margins a little bit because they're selling more of those cars. So basically their margins come down because the cost of creating the car is a little bit higher. So anyway, really, really big stuff. He said that this was their biggest energy year ever. And as you can see here, 6.5 gigawatts of energy storage deployed in 2022. So, really, really good year for energy. So everybody should be paying attention to Tesla's energy sector as well. As far as predictions for 2023, Zach said demand is high. He repeated what Elon said. Cost reduction, they're going to increase volume and increase efficiency of building. So that's obvious. The more you can build, the more efficient it becomes to build each one. They're going to get rid of Berlin and Austin inefficiencies that were part of the startup. And interestingly enough, he said that they're going to be unwinding the costs of COVID instabilities. So I think what that was is that, when you have all this chaos going on, you have to be a little bit conservative and you have to do things not quite as close to the edge of the envelope as you normally would. And so they can now start to dismantle some of that construction that they put around them, right? The procedures, the extra stuff that they have on hand, all of those kind of things that you really need when everything is very, very chaotic and unstable, they can start to unwind that. So that should be a really, really good thing as well. Zach also noted deflationary environment. So that's interesting, of course, because the US Fed is still calling this all inflationary, but pretty much everybody else is saying deflationary, but he just threw that out there as if it was true, and I believe it is true too, but I think that was a little zinger at the US. So anyway, he talked about interest rates and deflation right next to each other, so I think that's kind of it. He talked about them partnering with great suppliers, which have to be amazing to be able to supply Tesla, just the insane demand they have. He also said how they're going to be pricing, or they are pricing products, again, vehicles probably, to they're viewing this for the long-term structure of selling these cars. So that will have an impact on short-term margins. And that is the kind of thing where it's like, okay, so these price reductions are going to impact short-term margins. So pay attention to that, shareholders. We'll see what the stock market makes of that tomorrow. That's probably the news that the stock market will act on the most. But what it's going to do is create a long-term viable strategy. They're going to get more market share. Long-term, they will be perfectly fine and sustainable, but they're looking down the road, not at next week, as they price these vehicles. So really good stuff. I think it's very intelligent of them to be looking to take as much market share as possible. When you've got a recession, when you've got everybody else being scared and not wanting to make any moves and just hold on and, you know, hold on tight and not do anything, to be able to go out there and eat all of their lunches, that is what they're turning into the giant bully. They were the little scrawny kid that nobody paid attention to and then laughed at, and now they're turning into the bully of the schoolyard. Hopefully not in a bad way, but they're basically just eating everybody else. 2023 brings Cybertruck to market. With an asterisk that I'll talk about in just a little bit, and more details about this and other things at Investor Day. And by the way, anybody at Tesla, if you're watching this, I would love to go to Investor Day. Give me an invite and I will go. I'll get an airplane ticket tomorrow. So anyway, so now moving on to question and answer time from the shareholders. Again, repeated questions about whether demand was exceeding production or how was demand. Demand exceeds production, so no problem. They don't have a problem selling every vehicle they make. Will they take full advantage of the $45 per kilowatt hour subsidy for batteries? That was interesting. I thought it was $35 per kilowatt hour. Anyway, that was a number that was thrown out. I'm not positive that's correct. I thought it was 35. Anyway, I think this was Zach that said this. They're going to rely on domestic manufacturing, which they already were planning to do, and that's a good thing. He actually said that he thought this was a really, really good part of the bill, and I totally agree, to bring more manufacturing of this type of stuff into the United States. So anyway, that will be a very, very good thing. It will help them to onshore a bunch of manufacturing. They will have to split a lot of this with Panasonic because they are their partners, of course. So some sort of 50-50 split, so $22.50 each if it is $45 per kilowatt hour, something like that. So anyway, he said that the value credits will not be gigantic this year, but could be gigantic in the future. That was the words. And I think that was actually Elon Musk that said gigantic. He loves to use words like that. It's supposedly around $150 to $250 million per quarter at the beginning with these credits, and then that will grow over time as Tesla manufactures more and more batteries in the US, and then I would assume also is able to purchase batteries in the US from other manufacturers as well. So that could end up being a pretty big, gain on all of that. Again, incentivizing manufacture onshore in the US, which is also Tesla's plan, which is great. This is a really nice thing. Elon Musk said that they want to use these incentives to help improve affordability. And I say yay to that. So again, that's the kind of thing where they don't just like grab it all and just make more and more profits. They sort of split the profits with the consumer. And to some extent, that's only fair, right? If you're in the United States and you're paying tax dollars for this subsidy, it would be great if you could get some small benefit out of that. So anyway, I really like that they're planning on sort of accommodating and making more affordable the vehicles because of these tax credits. So in fact, actually, they said that they looked at the tax credit benefit as a tool to accelerate the adoption of sustainable energy, and that they looked at it as they were considering what sort of price cuts to do early this year. So they were making some projections and thinking about how this would all work together. And part of that was that they could cut the prices more than one might at first assume, because they expect to be able to count on these subsidies. Nobody knows at this point because the government still hasn't given, kind of the final word on all of this, but that's what they're projecting forward and trying to do this. So anyway, really good. As far as, let's see, 20% gross year-over-year gross margins, which is good, and a $47,000 average selling price for all models of vehicles. So that includes all the way up to the Model S Plaid and stuff, which is very expensive, or Model X Plaid, but down to the Model 3. So it looks, obviously, because it's skewing down into that $47,000 range, they're expecting to sell a lot of inexpensive cars. And interestingly enough, if most of their mix is the Model Y, that's cheaper than any Model Y vehicle. So that means that they might be looking, a little bit of a hint that they might be trying to drop the price of the Model Y into the 40s again. I'm pretty sure when we bought the car at the end of 2020, it was just under $50,000 for the car. And so it's still a little bit more expensive than it was. Of course, with inflation, that's effectively it. But anyway, if they're saying that they'll be able to get 20% gross margins, that's less than what it has been, but not bad, but that they will have a $47,000 average selling price. That's actually really interesting, and a way for Tesla to, it looks like they're going to be aggressive about reducing the prices of it. Okay, so one thing that they said about the selling price and how much it dropped and how everyone was concerned. So the selling price of the Model Y long range was like $66,000, dropped to $53,000, and people said that is a huge difference. But what they said was that the backlog of orders was so long that many of the people who were taking delivery had ordered back when the car was like $60,000 or something, not $66,000. So they had ordered when the car was much cheaper, which means that it wasn't as big a drop as people thought. It was a big drop versus what the price on the website was, but it was not a big drop, according to what people were actually taking delivery of. So remember, if you have a 6-month wait and you order at $60,000, even if the price goes up to $66,000, you're locked in at $60,000. So the price drop from 60 to 53 is not nearly as much as 66 to 53. So anyway, just another way of thinking about that. So I thought that was very, very cool. Operating margins, their energy, this was another nugget that was really amazing, which is that their energy is growing faster than their vehicles. And I guess you can look at that, right? You've got a 40% increase in delivery of vehicles, but a 64% year-over-year increase in installations of stationary storage. So that's really cool. I mean, it's in the numbers, but it's just really neat to think about that, out loud. Now, of course, the base of stationary storage is much smaller than the vehicles, so it can grow fast without having a huge effect on the company. But eventually, it should have a really big effect as Tesla has more batteries and they're able to deploy more things besides just vehicles. That should be able to grow really fast. Apparently, the demand for stationary energy storage, I know I would take a couple of Powerwalls if I could get a hold of them. I just can't afford to put in a solar roof plus the Powerwalls. So anyway, if you look at that kind of a thing, as they are able to roll out both consumer level Powerwalls and also commercial level mega packs, they're going to be looking at being able to generate massive profits with this. And those things should actually be more profitable than vehicles, just because there's a lot less stuff in them, right? There's just aren't a lot of moving parts or anything like that. So it's actually much cheaper to build this thing. And then, you can charge bigger margins. So anyway, that should be really interesting to keep an eye on in 2023. Also, Elon Musk was, this was a important thing. He said, I love this. He said, most retail investors that are thinking about this know it, but it doesn't seem like Wall Street does. And most of us do, which is that even if you sold the car, a Model 3 or Model Y at 0% margin, you have this upside of software like full self-driving. And that is close to 100% margins incrementally to put on a vehicle. So, even if you don't do that, and even if only 15% of people have a take rate, you're still getting then 15,000 divided by, or let's make it 10%. So anyway, 1/9 of that, right? So you're effectively increasing the cost of every single car by over $1,000 if only a small percentage take the $15,000 full self-driving option. So anyway, so you can make margins beyond just the hardware sale, so they can afford to cut their prices much, much thinner, even though 20% operating margins is still perfectly fine. That's like, again, pretty much every auto company in the world would be salivating over getting 20% margins. So they get that, plus they could get software margins on top of that. So pretty amazing. Elon Musk said, when fully autonomous, that is a value increase in the fleet that might be the biggest asset value increase of anything in history. And I know he's said something close to this before, but that is, again, worth thinking about. You're looking at flipping a switch, and all of a sudden, every single car, including ours, that has full self-driving beta on it, could suddenly become a robo-taxi, or at the very least allows you to do other things while you're in the vehicle. Even if you don't use the car as a robo-taxi to explicitly make money, if you can do work, if you can work on your laptop during your 25-minute commute to work and back and forth, so let's say it's an hour every day that you spend in the car. If you could spend most of that ride working on your laptop, answering emails, doing things that you can't normally do in a car, that's productivity gain. So even if you're not explicitly making money with a robo-taxi, just the fact that it can drive you places, it's like having a chauffeur, but not having to pay for a chauffeur. So, that's that kind of a thing. You get to be a rich person, I guess, and have that. So anyway, that was another one of those golden nuggets that was dropped during the chat, the Q4 thing, the question and answer session. Then somebody asked about Twitter, and Elon Musk said that his 127 million followers suggest that he's reasonably popular. He said the vast majority of people, the number of followers speak for themselves. And he said that Twitter could actually, over the long term, drive demand for Tesla. And he suggested that not just Tesla, but other companies, again, he's working as the CEO of Twitter here in this case. But he was like, if you use Twitter in an effective way, he didn't say advertise, he just said use your Twitter account in an interesting, effective way and in entertaining, etc., that you can actually drive a lot of business your way. So again, I did a video about this where I talked about their untraditional public relations, but this is one of the untraditional things that they do is they make use of Elon Musk, but also Twitter as well. So anyway, he said that he thought the net value of Twitter was a big positive. Getting back to the 4680 ramp, in Austin, 1 out of 4 lines are in production with 3 still in the commissioning phase. So that means wherever they are right now, even if they don't ramp up efficiencies and stuff, they should be able to quadruple the number of batteries they can produce just by having 4 more lines. But it sounds like they're also working on efficiencies and stuff too. So, if we're thinking 1,000 cars a week, with what they have now, they could be going to 4,000 cars a week with all 4 of those lines open. So that starts to become a fairly impressive number of vehicles. And then, of course, if they can continue ramping the efficiencies and double that, then they could be looking at 8,000 cars per week or something just from 4680. He did say that they need to have a cost-effective ramp of the 4680 battery cells ahead of the Cybertruck release, which means that Cybertruck will be using 4680 battery cells. So there you go. You heard it from them now. I think, everybody thought that the semi-truck would be doing that, but it made a lot of sense for them not to use it because it didn't ramp fast enough. But the Cybertruck is definitely going to be using 4680s. So let's see, big year 2024. Oh yeah, Cybertruck. So Cybertruck is going to be produced in 2023, but it's going to be a small number of them. They said, don't expect a lot of Cybertrucks. He did also confirm that they have beta versions. I've heard rumors about this, that they have been making beta versions of the Cybertruck. And he said some have been built already. More are going to be built in the near future, like next month. So they're making prototype vehicle, not prototype. Prototypes would be things that you're just making. These are actual production pathfinders, right? So they're beta versions of the vehicle to see how to do production effectively. So they're very, very far along. So I'm still holding to probably somewhere around July or August that they'll start producing these. But again, expect these things to be in the hundreds, maybe 1,000 by the end of the year, not tens of thousands, which is too bad because I would love to see lots and lots of them out there. Elon did say that this will be the car that he will drive every day. He says it's just a once in a generation. He said a special once in a while product. So that's what he said. I expect that it is going to be a heck of a thing. So also another nugget, which again, I think we had some confirmation of before, but hardware 4 is going to be in the Cybertruck first. So that will be really interesting. That means that will be coming into the Cybertruck. It also means that almost definitely hardware 4 is not in the Model 3s or Model Ys that are being produced now, even though there were some rumors about that. So then somebody asked, will hardware 3 need to be retrofitted to hardware 4 in existing vehicles? And Elon said no. He said that would be not economically feasible. And he said basically what is going to happen is that hardware 4 will not be as good as hardware 3 will not be as good as hardware 4, but it will far exceed the average human. And he said, for example, if hardware 3 was 200 to 300% safer than a human, or 2 or 3x safer than a human, hardware 4 could be 5 to 600% safer. This tails into my prediction that you will not be able to rent out your vehicle as a robo-taxi if it's on hardware 3. I think that, again, you know, maybe this won't come to pass, but I think that they will probably either make you pay for an upgrade to hardware 4 for your own vehicle, or purchase a new vehicle starting with the Cybertruck that has hardware 4 pre-built into it in order to utilize it as a robo-taxi, because it will be like, you know, kind of like twice as safe as hardware 3. So again, hardware 3, perfectly good for driving around, will be good for you as a person, I don't think that you will be allowed to use that as a robo-taxi, but we will see what happens with that. That's just my personal opinion about that. Again, FSD, the whole point is to improve average safety and to improve quality of life for people who are using this software, right? So again, you don't have to pay attention to the road, but also the roads are safer. So really, really important stuff. Let's see. So yeah, so that's the midsummer slow. Yeah. Volume in 2020. Oh yeah. Volume in 2024 for Cybertrucks. So, that's the year that it's going to be lots and lots of Cybertrucks on the road. So that's the way it's going to go. Finally, we get insurance. He said that outsized results due to the competition, which means that they were talking about how it's a relatively small business at this point, but because Tesla's offering lower rates, that means that State Farm and Allstate and Geico and all the other companies that are doing insurance have to pay attention to that, and they have to lower their rates as well. So he said effectively what you're getting is, because of the competition, you're getting lowered rates for everybody, even if they don't use Tesla insurance. He said they are also getting really good. They've redesigned the vehicles to be faster and cheaper to repair. He said most accidents are kind of fender benders or scratched paint or something. And so what they're working on is, particularly in the fenders, it sounded like, the bumpers on the back and front of the car, they're making them so that they can be replaced very, very rapidly or repaired very, very rapidly. So I think they're trying to do a lot of their service within 24 hours, like same day service, 1 day service. So we'll see how that goes, but they're using the data from their insurance to make better vehicles. He said that was the thing that they didn't have insight to, because if you're driving, I'm insured through State Farm, and if we had an accident, State Farm would take care of repairing the car. It wouldn't be Tesla. So Tesla would have no data, no insight about what was wrong with the car, how it was fixed, all of that kind of stuff. So they're using the insurance to figure out how to make a better car that can be repaired better. So all of this stuff is really amazing. All right, that is a ton of things to get through. I don't know. It didn't seem like that much until I sat down to actually talk about it. And then I was like, wow, this was a whole bunch of stuff. Anyway, I hope you enjoyed this presentation, this summary, and maybe some explanation, because they went through a lot of this stuff really, really fast. So I tried to call out specific moments and explain them a little bit better. Anyway, I hope you enjoyed that. If you did, please do like the video, because that's how other people can find it, and consider subscribing for more of this kind of content. And as always, a huge shout out to my patrons on Patreon. Thank you all so much for your support. I truly do appreciate it. And in the meantime, I will see everybody in the next one. Have a lovely evening. Bye-bye.